Here's why I'm focused on dumping all real estate exposure that I and my family has. And I'm traveling right now, so that's why I'm sitting in the entrance to the bathroom in my suite here. Um, so if there's a problem with audio or the camera or whatever, you'll have to excuse me. But this message is extremely important, and the city that I'm in right now is very real estate focused. 30 to 40% of the GDP is of this country is real estate focused, and I'm basically focused on trying to get people that I care about to dump real estate. And there's a couple different reasons for that. And, there's going to be people that are listening to this who are getting super excited by treasury companies and all this other stuff. But there's an underlying trend that I want everyone to focus on, which I think is the most important thing. The underlying trend is that Bitcoin is becoming an important, relevant, essential asset class. And when that happens, you're going to face a scenario. And the reason, by the way, the reason why it's happening is very, very simple. And again, this is going to be a less dopaminergic video. So this is really for those people with a slightly higher net worth with other assets probably in their portfolio. Right now, the whole conversation in the Bitcoin space is all about Bitcoin treasury companies and which one are we trading in on and out of, and which one's going to catch the next pump and all this other stuff. It's basically given Bitcoin as an excuse to shitcoin. And they've all just discovered that, wait a second, you can just get a broker account in shitcoin. And I heard a quote the other day, like, I think it was from David Bailey, like, the only thing better than an unregistered security is a registered security. So, all of these, all of that is a distraction as far as I'm concerned. Yes, if you have access, you have the potential to. There's basically two things that you got to do if you are interested in Bitcoin treasury companies, and that is, number one, do you have pre-access, right? Do you have access to deals before they go live? Or number two, do you have trapped capital that just can't invest in Bitcoin in a tax advantaged way? In which case, trying to pump one of these up to, a 7-8x MNAV might make sense because you can't do anything else with that capital anyway, right? But if you have your capital in an unobstructed way, we need to focus in on exactly what other assets that are out there that you can do something with. And that's what I want to focus this video on, and focus really back onto the most important thing, which is acquiring as much Bitcoin as possible. Now, if you've got a real estate portfolio, then you're going to be subject, in my opinion, and my perspective, to a wealth tax like you've never seen before. And it's not going to be called a wealth tax, right? Because if you have 40% of your well, more than that. Most people have like 100 to 120, 130% of their net worth in real estate, right? The market that I kind of speak to, which is the $500,000 to $30 million net worth market, majority of that, based on all data that's ever done on wealth, is in real estate right now. So I don't need to even wealth tax you, because I can just tax your real estate. Right? I don't need to call it a wealth tax. I don't need to do any of that. I can just tax your real estate and slowly seep wealth from you, which is why, property taxes in the US are really destructive to overall portfolio values. So yeah, like this is the thing that I think is important to speak about, because I think, property. So, for example, let me give you an example. My dad's family moved to the United Kingdom after being kicked out of their home nation, and they bought a house. They bought a house, the house that I grew up in, basically, and that they bought that house for £5,000. Today, well, maybe not today because the market's on at peak, but peak market, that house was worth £500,000, right? And really, that was a 30-year journey. And if we extrapolate and take that CAGR of that 30-year journey from £5,000 to £500,000, and then say, okay, well, The only reason you would hold an asset is if you think the trend is going to continue in any sort of way. In another 30 years, that house itself would be selling for £56 million. And that is just not, this is a standard, 3-bedroom family home. This is not prime real estate. This is not like where I'm staying right now, right on one of the main parks. Like, this is not prime real estate we're talking about. And most people in that $500,000 to $30 million net worth have a property portfolio that is not prime real estate. Prime real estate is reserved for billionaires, 100 millionaires, and multi-decker millionaires. That's prime real estate is reserved for those people. So while property has been a good store of value, there's been a bunch of tricks that have been implemented to make it a store of value, right? Firstly, you have the fact that all supply is completely controlled by the stroke of a pen. This is what determines your supply dynamics on real estate. Not building, not construction, not how many people you have to build those properties, not how many bricks you can get, not what sanctions are going on. This. Because when they sign that you can have building permits, suddenly the businesses that are really good at constructing and building homes will spring into action, and they will build those homes because they now have the ability to do so. So the government controls the supply dynamics of real estate. They are in charge of that, which, by the way, is they're also in charge of the amount of money and liquidity that can go into real estate, because it's all based on interest rates and lending criteria and who can get access to capital and who can't get access to capital. So one of the things that I realized in 2008, because that was like sort of like the beginning of my journey, and my first foray was working in real estate. And what you realize is that real estate is really a credit game. It's nothing to do with the property. It's a credit game based on the scarcity that's generated as a result of the stroke of the pen, right? And then it's a decision on how much liquidity, how much expansion can we do to the monetary base, and then where can we shove that in order to not create inflation, right? That's when that velocity starts coming down. And that velocity comes down because that printed cash doesn't get spent, it gets put into assets. So we have asset price inflation without CPI inflation. And that's really the game of all fiat, right? That's the game of all fiat. And now what they've realized is they have another thing that they can pump up without any issues, and that's called Bitcoin, right? And the reason why Bitcoin works so well is because there's no societal cost. Nobody needs to worry about who has a roof over their head. All the children can go to, can go to bed safe at night. Families will do well. You will continue voting for your government, and everything will be fine. That is the benefit of shifting from real estate being that asset to Bitcoin being that asset. And I like to follow incentives over the long term. And if you don't think that governments are going to grab those incentives and squeeze them, then you don't understand human nature, and that's okay. When Bitcoin, the penny dropped for me, I was walking around a park, and the park backs on to houses. And the first thing I thought after the penny dropped was, every one of these people is fucked, because they are going to get rug pulled. My mind just went to, this is the perfect asset to do this with. To extend the life of fiat for another 50 years, 60 years, 70 years, 100 years, you need something like Bitcoin, right? There's no more pressure on the government to not give out permits. There's no more political nothing, right? So I think that this is a good thing, by the way. This is a good thing, by the way, because it means that more properties can be built, more houses can be issued, right? And that's a good thing, because property prices will come down, will maintain, and this goes on to what I think is going to happen here. I think you're going to see a property price stagnation, at least in single-family homes and normal people houses, right? I don't think you're going to see stagnation in prime real estate. but I think you're going to see stagnation in normal people houses. And that stagnation can come in many forms, right? It can come in the form of, and let's talk about forget all those different forms. The form that I think it will come in is property prices are just going to stabilize. I do not think that, especially in the UK and other markets outside of the US, I think the US goes in the same direction as I'm saying, but there's tax advantages in the US that I'll come on to in a second that sort of buoy that property market up a little bit. But I think in the UK, I think in all the European markets, etc., I think that, what is going to happen is that property prices are going to stabilize and they'll stay flat, and new fresh capital will be pumped into other assets like Bitcoin, for example, and that stagnation, along with the printing of money, which will increase wages, will actually make real estate more affordable for the average person. The negative of this is if you hold that real estate, which is the boomers and that generation that has held all this real estate, you, in that stagnation, are going to be taxed. That is going to be your wealth tax. You will sit there with a $4, $5, $6, $7, $8, $9 million property portfolio, and in 7 years, it will still be worth $4, $5, $6, $7, $8, $9 million. It will not appreciate in dollar terms. That's what I think has happened, and that's what I think will continue to happen. And that will be your wealth tax, right? It will be the missed out gains. That will be your wealth tax, while the market is completely pivoted from real estate over to Bitcoin, and lending, credit, and everything else is focused onto Bitcoin. Bitcoin is a better asset to lend against anyway than real estate. Don't have to worry about maintenance, don't have to worry about the location, can be internationally competitive on financing, etc., etc., etc. Like right now, if I want a Singaporean bank sitting in London, if I want a Singaporean bank to offer me financing on my Bitcoin, I can do it. Right? They don't need a team here. They don't need anything because the Bitcoin's on chain. So therefore, it is completely verifiable, and I can already see everything I need to see in order to make this decision. So I think that real estate's in for a very, very tough time. And what I'm doing right now is focused on part of the reason why, being here, having conversations about dumping real estate as fast as humanly possible, or at the bare minimum, borrowing against it. Ideally, I think it's going to be a case of dump it, but borrow against it if you can't dump it, or there's a tax liability that's too high, or whatever the personal situation is, and get into Bitcoin, right? It is time to, and look at what's happened in New York right now, right? You got New York that's just hired, because that's what you're doing. They just voted in, an office that is completely and utterly lunatic. Right? Like they're loony lefties, right? Whatever your politics is, it doesn't matter. At the end of the day, we have evidence that the further left the city goes, the more it deteriorates. Now, the good news is, if you're a left-leaning candidate, is that they're all slaves to the people that hold money. And the lucky thing about it is, people that hold money in cities like New York, London, etc., are in real estate. So you could probably see incentives that make property prices, if you hold prime real estate, go up. If you don't hold prime real estate, I think that you need to start considering how much of a threat you're at. And it'd be better to pivot that capital, whatever you can get out of it. Again, personal decision, but whatever you can get out of it, it might be better to pivot that from the real estate into Bitcoin, for the long term, especially now. You've got every big dick baller in finance who's launching a Bitcoin treasury company. And, I know that my friend Jason Williams just launched one with, he was part of the deal with Anthony Pompliano. And Jason's first tweets, he's a very, very charismatic person, and his first tweets were, "We've already bought the Bitcoin. What are you guys doing? We already own the Bitcoin. How much you buying?" Right? The aggression amongst wealthy finance bros is extremely underrated to the rocket fuel that will come for Bitcoin. And that's what they're doing now. They're measuring their dick sizes by how much Bitcoin they can buy through Bitcoin treasury companies. Just imagine and understand what's happened here, and then go, I hold a real estate portfolio. You are completely fucked. There is no doubt in my mind here that real estate versus Bitcoin it's a stratospheric difference as to what's going to happen here, and you've got to be in front and stand in front of the capital where it's moving, right? I know many people, like, I don't own a home for myself, right? I just don't see the benefit of it for myself just yet. Life circumstances might change, life circumstances might change, and then I might buy one. But as of right now, I would hate to own a home. Own a property? Holy shit, right? That's a pain in the ass. But again, like I said, the caveat is, like, if I get married, have children, whatever, then I may own one. But again, I will write that off. I will consider it a complete and utter loss from the second that I buy it. So, regardless of that, the point here is that energy is shifting. The financial energy of the cash that's being printed is shifting. It is moving to a new asset. It's happening right before your face. The US has just now, in the last day or so, made it possible for your Bitcoin to be considered as a lending vehicle for further real estate borrowing, right? So this now starts becoming interesting for those prime real estate holders, because what's going to happen here is they're going to dump their inefficient real estate because it's more now incentivized to use that as an asset to borrow against for bigger and bigger real estate. So I think you're going to see stagnation in the property markets. I think you're going to see that be the wealth tax. No one's ever going to mention it as a wealth tax, but the stagnation is going to cause the wealth tax. It's the reason why all these markets like Japan, Europe, et cetera, are running towards these Bitcoin treasury companies, because they're valuing them kind of like commercial real estate or a fixed income product, not, an equity. So, and I want to talk about that, so subscribe to the channel, because I think that's an extremely important nuance that people are missing when it comes to these Bitcoin treasury companies. They're trying to anyway, we'll talk about that in the next video. But the point here is, if you're holding real estate right now, you need to evaluate every single one of those properties. And here's how I would start. I would look at the last 5-year CAGR, and then I would project that out and say, are you happy with that? And then look at the last 5-year Bitcoin CAGR and then project that out. That's where I would start, because the one advantage that you have in real estate that you don't have in Bitcoin yet is the mortgage factor, right? The leverage factor. So you may get into a situation where you can put $100,000 into real estate but buy $500,000 worth of property. I would argue, based on my analysis, that even in that scenario, Bitcoin performed better. And then once you've done that analysis, look at the risk adjusted analysis. And how you do that, from a normal person perspective, is go through and write down the risks of owning real estate versus the risks of owning Bitcoin. And my list, every time I have to do this when I'm talking to people, the list gets longer and longer on real estate, and it gets shorter and shorter on Bitcoin, because Bitcoin's turning its headwinds into tailwinds, especially with the new administration in the US. So real estate is a dangerous asset right now if you are looking at compounding your wealth. And I would highly suggest you do this analysis on your portfolio and figure out which one is better for you, and then take the time to understand what's going on. If you're just finding Bitcoin right now, you're fucking late. I'm sorry. You're late, which means you need to catch up. You're late, but it doesn't mean you can't catch up. So, look, do this analysis, sit there. It's going to take you a little bit of time. Don't be a dopey brain and a dopamine addicted fish head. Sit there and analyze your property portfolio. Don't just scroll to the next video. Don't just watch the next Instagram post. Sit there, take 30 minutes and find out what's happened to your property portfolio, and then extrapolate that out, compare it to Bitcoin, then do a risk-adjusted return, and then evaluate what you should do. That's the way to think about this. But from my perspective, real estate is going to get screwed. It is being screwed right now. It is the form of wealth tax that will come amongst Western nations, and normal people homes are going to be the issue, because the governments are incentivized to do this, because the more they keep normal people homes, prices lower, the more they get voted for, and that's what they want to do. It's all about the vote. They will pump up certain assets, and Bitcoin will be one of them at this point, and they will hold certain assets flat because that's what gets them the votes. But ultimately, there's always only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.